Hi, good evening. We meet again, and there are five questions coming your way again. Your good night, five questions. The first question, before I talk about that, let me tell you these questions are from capital market. This time I've been using this week mostly from economy perspective, and then the issues in capital market which has been somehow in the news. They are around which we have got questions picked up, and that will check your reading of the newspapers, careful reading of the newspapers, and current updations on the issues of economy and capital market in particular. From that perspective, here are the questions. The first question: in the context of the recent surge in the automated trading and regulatory securities over algorithmic issues, consider the following statements regarding SEBI's framework. All right. I have to identify which statement given above is correct. So that way, sometimes you put a filter in your mind. You read what the question wants, wrong ones, right ones, and then accordingly, when you read, you will get a lot of insights clear. So the first is SEBI mandates that all algorithmic trading strategies must be pre-approved by the stock exchange before deployment of any broker or proprietary trader. No, I don't think this is. They are regulating, but then there's like absolutely everybody would run away. That's not right. The regulatory objectives of controlling black box trading is to prevent market participants from using unauthorized algorithms, even if the algorithm's owner is a qualified institutional broker. I suppose QIBs, they have been. I think you may remember this Jane Street case, few thousand crores issues. SEBI had really flagged. So I think this looks right, and I think that's one correct that we have got. I think June, July 2025, this debate was there, if memory serves me right on that. The next one we have got: India's equity derivatives market has globally become the largest by volume, primarily driven by the retail segment's high frequency algorithmic trading. No, primarily driven by the retail segment. That's not correct. So I think I would cancel one. I will cancel three. I will accept two. Answer would become in that case B. B is the right answer. I think reasoning is wrong for the third one. Otherwise, the statement looks okay. The second question: the move to T plus one settlement cycle for most listed securities in India has been completed. What is the most significant anticipated impact of this change on the capital market ecosystem? Very debated issue that we have got. It will increase. So we need to identify which one is correct. A, B, C, D. All right. It will increase systemic. Systemic. I'm sorry about my pronunciation. It will increase systemic liquidity risk due to the shorter time available for margin calls and fund transfer. उल्टा बोल रहे हैं. It will increase systemic now. उल्टा हो गया. That's not correct. It will increase the clearing corporations to increase the net worth requirement of a registered broker. नहीं तो टाइम की बात हो रही है, नेटवर्थ की बात नहीं. This is also not wrong. Not correct. See, it will reduce the counterparty risk for investors to free up capital currently blocked as margin money by one day. Yes, T plus 2 से T plus 1 होगा तो this looks correct. Yes. Look at D. It will make the Indian stock market unattractive for foreign portfolio investors. I think they will be happy to come operating in different time zones. No. I think shorter time would really make them attractive. I suppose I'm going to go for C as the right answer for this. The next one we have got: consider the following statement. UPSC C 2018 का क्वेश्चन है. अच्छा, that's a previous year's question. The Reserve Bank of India manages and services Government of India securities, but not any state government securities. The Reserve Bank of India manages and services Government of India securities, but not any state. क्यों जी सेगमेंट स्टेट के भी आते हैं? इनका गलत है ये. Which one statement given are correct? So it can be which one correct. The second question: treasury bills are issued by the Government of India, and there are no treasury bills issued by the state committees, governments. They do actually. G6 इनका भी आता है. So this is correct. Third, treasury bill offers are issued as a discounted from the par value. That's where the buyer will make some money. So that's correct. So I'm going to go for 2 and 3 is correct. Answer becomes C in this process. Fourth question: SEBI has recently been contemplating changes in the minimum public shareholding MPS norms for listed companies, which statement regarding the current MPS structure and its purpose is correct. So you have to basically look for the MPS. All right. The current mandatory MPS is 25% take of the total a paid up equity, and the SEBI allows a new large cap company to achieve this in a relaxed period of 5 years. नहीं 3 साल में है. This is not correct. पहला part correct था जबकि. Second, MPS only includes shares held by the individual retail investors, excluding shares held by the mutual funds or insurance companies. No, they are for everybody, all of them. All of them. So this is also not correct. The primary objective of MPS is to ensure price discovery and prevent price manipulation by reducing the concentration of ownership. I think that's right. They would identify कि कहाँ fix करना. That's correct. D. Companies failing to meet the MPS norms are subject to only to a financial penalty with no mandatory restrictions on the future fundraising activities. Yes, I mean इतना आसान होता तो everybody would be taking that much of risk. No, it is restricted, and that's what's the big deterrent that they have on their head. So I suppose very obvious. The choices are easy, rather I would say. If you know the concepts, if you have been reading around them, if not, some of you are not very comfortable with these questions, it's very important that you go back and do read a little bit around that. That's C is the right answer in this. The next one, consider the following statement about IN InvITs. Yes. INVITs are structured as an alternative investment fund, AIF, and are regulated by the Reserve Bank of India. Which now SEBI karta hai. I mean, that's something which is, let me see, statements. The return of unit holders primarily comprise a share of the toll-free revenue generated by the underlying infrastructure assets. I think that's where they basically get the value. Yes, correct. More than one can be correct. The majority of the funds raised by InvITs must be invested in the assets that are already generating revenues. Operational assets. That's again correct. I think एक ज़्यादा correct हो सकते हैं. 2 and 3 are the correct options that we have got. I suppose that's what we have got about this. And I suppose we will take a word. The word of the day today that you have got is well disposed. Well disposed, if I can possibly assume that you can have as something which is friendly and sympathetic towards something. That's a well disposed relations that you have got with certain country. The relationship is friendly, cordial, and then that's what we can call this as well disposed. You can use that as writing an answer of international relations or maybe in administration. So cordial and friendly is what is well disposed. I think it's a very common word. Maybe some of you may be knowing already. All the best. And then I would like to continue for one more day in the economy, and then we'll have some more issues coming up for you next week. I suppose this is all for me for tonight. Good night.